A very warm welcome to you wherever you may be. It's always a pleasure to have you join us each week right here on Almond Finance and Wealth Report, your one-stop shop for all the latest happenings in the world of insurance. My name is Lucille Lugbe. You are welcome. On our lineup this week, first we join Faith and our guest, Mr. Justice Yaw Ofori, the Commissioner for Insurance Ghana, where they discussed a wide range of issues in the Ghanaian insurance market and the rest of Africa. Speaking on the course of interview, Mr. Ofori said that insurance regulators in the continent have a huge role to play to build public trust and confidence in insurance. Do take a listen.
The regulator has a big role to play.
Okay.
To instill public confidence, and that can be done by being very strict and fair, open when it deals with insurance companies that try to flout the law or try to be difficult to policyholders when it comes to make payment.
On this edition also, we bring you highlights from NAICOM Insurance Directors Conference that was held recently in collaboration with the College of Insurance and Financial Management at Lagos Oriental Hotel, Victoria Island, with the theme Corporate Governance, the Panacea for Sustainable Growth and Development of Insurance Business in Nigeria. Speaking at the conference, the Acting Commissioner for Insurance, Mr. O.S. Thomas, said that companies don't just die, but they are killed because of non-adherence to corporate governance codes. Do take a listen.
Companies don't die. They are killed.
Plus, of course, all the other extras we bring you each week on the program. So sit back, relax, and enjoy the lineup. Details in just a moment. Please stay with us.
A very warm welcome to you. It's a pleasure to have you join us on the set of Almond Finance and Wealth Reports this week. It's indeed my pleasure and honor and privilege to have my guest, not have him or him have me in his office for this exclusive interview. I'm talking about no other than the Commissioner for Insurance Ghana, Mr. Justice Yaw Ofori. A man, I must say, whose name matches his office. When you are a regulator and your name is Justice, what more can you ask for? Thank you so very much, sir, for joining us.
Thank you very much.
Thank you. Let's go straight to have an overview of the Ghanaian insurance industry. Now, global players have forecasted a 23% growth rate for the insurance market in Ghana in 2018. They are looking at Ghana as a strategic market for growth. What would you say is responsible for this positivism in the insurance industry in Ghana?
Well, first I would say maybe because of political stability, good economic prospects, and a strong regulatory regime. I think I'll take those three issues as being probably the engineer behind this growth.
Okay, now, oftentimes when an industry or a particular sector is on a positive growth path, the regulators must be doing something right to put players on the right path of growth. Now, would you say the industry in Ghana is where it should be right now, regulation-wise? And if no, what are those areas of your focus, given that you just took on this national assignment?
Yeah, I think although we are on track, we could have done better than what we're doing right now. we realize that there's much to be done when it comes to insurance penetration. Our current penetration level is below 2%, which we think is not good. We realize that we haven't been able to digitize the way we do insurance. We still do a lot of things on a manual basis. And I know there are a few companies that still does things manually. I think these are the challenges. If we look at more campaign towards the sale of microinsurance and agri insurance, we think it would actually increase our insurance penetration level, because we believe that majority of our population fall within the low income group, and microinsurance and agri insurance will be the products that will be meant for them. Despite that, in Africa, apart from South Africa, Ghana is the second country that has been able to make insurance very much accessible to the population. Currently, we have about 7.2 people on our market having access to insurance, and we think it's a very good.
How were you able to achieve that? Because that seems to be a lot of problem for especially countries within West Africa.
Yeah, we were able to achieve this through a micro insurance regime. So we currently have a micro insurance framework that guides the sale operations of micro insurance. We realized that with much education, and as I said, making ourselves more accessible to the populace, and also making people have more confidence in insurance through strict regulation, has actually led to the achievement of this penetration level.
Talking about telcos, we do know that in East Africa, for example, places like Kenya, it's actually the telcos that have driven, micro insurance. But oftentimes when you sample the opinion of underwriters in West Africa and some other places, they'll tell you going the route of the telcos, it's expensive. That's one. Then two, how do you go around the issues of regulation? Because if you're going through the route of the telcos, you're bringing two different bodies together, so to speak. You have your office as the regulator for the insurance industry, and of course you have another body regulating the telecoms industry. So how do you marry that? And talking about expensive, how do people play in that space?
Yeah, there's always the potential for conflict, but we don't see the telcos as insurers. They are not insurers. The policies are owned by traditional insurance companies, and these companies with the technical know-how helps them to sell the insurance and to pay claims. So it's like a means of doing business.
Okay.
Yeah, the insurance companies are trying to sell their products to the needy through those who have the technology.
Okay.
Because they cannot do it on the ground. If you do it on the ground, it becomes too expensive. So it's a tool for doing the job. So it's just like having a computer or a telephone to help you call somebody instead of walking to the person's home.
Okay.
So they are not insurance companies, but they are a tool to actually aid in the insurance business.
Okay.
Yeah.
But given that insurance is not, as you said, if I buy a product via the telcos and I suffer a loss, as the insured, who do I cry to? Is it the telecoms company or the insurance company? And when there are conflicts between customer and, of course, that borders on customer service, who is the ombudsman? Is it the insurance commissioner or the telecoms operators?
Yeah, we don't control the telcos, but they are doing business with somebody who is insured. Okay. So we do sampling of the market to know how they fare, customer satisfaction. Okay. And if we have issues, we relate it, we pass it on to the insurance company. Then they can deal with the telcos that they are doing business with. The nature of modern business is such that you always work with somebody, and there's always some kind of overlapping in irrespective of the separation of industry. insurance companies can never operate without telcos, or I mean, cell phones, means of communication, using the telephones, using the
internet and social media.
They're also being controlled by other entities, and we are using. So we have to find a way where we can all play together as a team, and also we should know our boundaries. When it comes to customer service, the customer knows, although he's buying a product of an insurance company, the face they see is the telco rep who is actually helping them buy the insurance through their mobile phones.
Okay.
Yeah. So if they have a challenge, they communicate through the telcos, and then it comes to us. The claims are paid by the insurance companies through the telcos. So it's about going digital. You see, as we say, we are now in a digital age. So it's sometimes very difficult to explain, but it's working. we don't see our faces, but business goes on. Yeah.
Okay.
They deduct it from the deduction is done right from their phones, and when there's a payment, it's paid through their phone. I mean, it's a complex. The world is going digitized, so.
And it's also going complex.
Yeah, it's getting complex, and if you try not to adjust, you'll be left behind.
Okay.
Yeah.
Okay, so over the years, I do know that insurance regulators globally, they've toiled with different approaches of regulating the insurance industry. Not all approaches have achieved much success. However, risk-based supervision is on the cards for insurance regulators at the moment globally. Do you think that holds the magic wand for the insurance industry?
Well, it's a new way the International Association of Insurance Supervisors recommend, and they are actually the lead in the world. They've tried and tested so many systems, and they think that is the way to go. Previously, it was more rule-based, whereby these are the rules, you obey the rules, and we do our checklist, everything is okay, and then you go. But satisfying the checklist doesn't mean that you are doing the right thing, or it doesn't mean that you are solvent enough to pay. So the risk base actually makes us take every operation of the company into account, from employment, staffing, membership of the board, the type of business they do, the underwriting, reinsurance portfolio. I think it's the right way to go, but it's also complicated. And it's also difficult.
Okay, why do you say that?
Yeah, because there are so many issues involved. There's no one way of deciding that. We cannot say you're going to decide on a company's risk level just based on maybe minimum capital. You can have you can satisfy the minimum capital, but there are other things that we need to look or investigate to make sure that actually you will be able to be solvent should there be a loss. So it's a good idea, but it's something that is always ongoing. Throughout the licensing period, you have to make sure that you are satisfying the minimum requirement. And so risk-based is always it's something that is a never-ending process. That is how I see it. You can be risk-based today, you can take a decision tomorrow that can actually turn everything all down altogether. But it has been compared to the rule-based, and everybody sees that risk-based supervision is the best. But I think we in the third world, although we are proud, we're trying to implement it, we are a little behind because maybe we don't have the right mechanisms to put things in place. We have a different culture, I don't know. And people are also not ready to accept change easily. It takes them a little while to actually adapt to the change. So sometimes we need a paradigm shift to be more proactive.
All right, welcome back. Moving on now, we'll bring you highlights from the one-day Insurance Directors Conference in Lagos. The conference is coming on the heels of the current drive of the National Insurance Commission to raise the capital base of insurance institutions in Nigeria and the need to carry all stakeholders along on the journey. Happy viewing.
The National Insurance Commission is a statutory body established in Nigeria to regulate and supervise all players in the insurance industry in the country. NAICOM, in collaboration with the College of Insurance and Financial Management, recently put together a one-day Insurance Directors Conference in Lagos at the Oriental Hotel. The theme was Corporate Governance, the panacea for sustainable growth and development of insurance business in Nigeria. As expected, the conference was well attended by chairmen, directors, and top management staffers of insurance companies. The conference is a continuing capacity building for directors of insurance institutions. Welcoming delegates to the conference, the president and chairman of council of the CIIN, Mr. Eddie Efekoha, said that the conference was timely given the current drive to increase the capital base of insurance companies.
Insurance business is unique in terms of its operation, products, and business model. Similarly, members of the boards of insurance companies come from various backgrounds, sectors, and professions, and all have had to comprehend the uniqueness of insurance business. This event is therefore apt at this point in time when various initiatives, including but not limited to recapitalization and market development, are being put forward for the purpose of attaining sustainable growth development in the insurance sector. Without any iota of doubt in my mind, the array of speakers lined up for today's event will in no small measure enlighten and broaden delegates' perspectives on the way forward in achieving these developmental goals. They shall, among other things, provide insights into the insurance business model and the current trends in the global insurance practice, present highlights of the reports of the diagnostics on the state of the Nigerian insurance market carried out last year by the Center for Financial Regulation and Inclusion of South Africa, X-ray growth experience from other insurance markets, especially within Africa, and highlight key performance indicators which members of every insurance board should monitor to ensure their companies stay healthy and efficient.
In his opening address, the Acting Commissioner for Insurance, Mr. O.S. Summers, said that the failure of corporate governance over the years has led to the death and, in some cases, distress of insurance companies.
The low level of effectiveness of corporate governance oversight in the insurance sector remains one of the major regulatory concerns to the Commission. This is for the simple fact that the failure of corporate governance in the years past, and probably still experiencing some, have played a prominent role in the death or distress of most corporate organizations the world over, Nigeria inclusive. Companies don't die, they are killed. Over the years, the Commission has made attempts at entrenching good corporate governance culture in the insurance sector. The development and issuance of Corporate Governance Code in 2009 and market conduct guidelines issued by the Commission are among efforts of the Commission in this direction. Let me state here for emphasis that the primary role of the board, either in private or public entities, remains the oversight of management to ensure the corporate goals, visions, mission, and values of the entity are strictly upheld at all times. The board is also expected to ensure the financial soundness and general well-being of the organization by monitoring the management to guarantee effective and efficient deployment of human and capital resources in the overall benefit of all stakeholders.
The first session of the Directors' Conference focused on the insurance business model. Speaker was Mr. Pranav Prashad, Senior Technical Officer, ILO, Impact Insurance Facility. In his presentation, Mr. Prashad said that insurers must put their customers at the center of their businesses. The second session focused on Nigerian Insurance for Growth, Diagnostics by Senfree. Speaker was Mr. Thomas Wishers, Assistant Director Insurance, Financial Sector Deep in Africa, FSDA, who was of the view that insurers must first grow their premium income to be able to play a significant role in the agricultural sector. The third session of the conference focused on financial KPIs of insurance. Speaker was Mr. Henry Akwara, Chief Executive Officer, Mayflora Consulting Limited. In his presentation, Mr. Akwara said that insurance companies that have high loss ratio are not pricing the risk properly.
When you have high loss ratio, it could either mean that you're not pricing your risks properly, or you do not have an efficient portfolio of risks, or that you are not efficient in managing the claims of your policy holders. So what it means is that we need to be sure that at all times policies are priced properly, because when they are priced properly, you can hold the right kind of reserve that will enable you meet claim expense. But if you don't, then there are going to be implications. High claims ratio is a problem. We're not saying that when losses crystallize, we shouldn't pay, but high claims ratio could be indicative of a lot of things. It could mean that we need to better help our policyholders to manage their risk properly, advise them on risk reduction mechanisms and a whole lot of other things. But the bottom line is this must be monitored properly, because it is an indicator of how well we are doing in terms of settling claims.
Other speakers at the conference were Dr. Nosike Agoke, Principal Partner, Agoke & Co., and a host of others. Given the high-powered deliberations at the Directors' Conference, delegates had questions for the speakers and the regulators.
My suggestion to you is, part of your engagement with FIRS, it's time, the right time, to include these KPIs that are being used in other jurisdictions that we are not using, to start using them now, more so when we are starting the recapitalization process. That's my suggestion. Thank you.
Principally and generally, based on your strategic plans, you determine what critical areas you want to set KPIs for, to beam light on for better management and better achievement of your strategic objectives. Thank you.
The NAICOM Directors' Conference was well received and appreciated by participants. Many believe that the Commission should have more of these stakeholders' engagements, especially as the insurance industry gears up for recapitalization.
And that's our time on the program this week. Many thanks for being a part of it. Join us again, same time, same station next week for a fresh package. In the meantime, feel free to always connect with us on all our social media platforms. Enjoy our parting shot this week, Kevin Sapp, at the 2018 Insurance Industry and Consumers Night. Get ready for the 2019 edition holding on the 22nd of November at Shell Hall Museum Center. If you think last year was late, get ready to rock on a bigger level this year. Thank you for your company. See you next week. Bye-bye.
When MMM scatter, now they are telling us say anything can make anybody crazy. One guy just wake up, they are like, I will burn their airport. Their airport, I will burn it down. they asked the guy, I said, Oga, which airport? He said, they built an airport. I will burn it. I asked the guy, I said, Oga, for where? He said, MM1. I will burn it. I tell the guy, I said, Oga, calm down. That's a federal government airport.